It is Wednesday, February 11th at 9 a.m. Health Tech Nerds local time. And we are recording an emergency pod because Humana wrapped up their earnings call this morning. Kevin, what did we hear?
I thought we heard a pretty good story. Obviously, the headline that everybody was waiting to hear was growth of MA membership came in at 1 million new members in AEP, up 20%, talking about being up 25% on the year. Market's actually reacting pretty well to the news. I mean, that is a lot of growth. As we've talked about at length, there's a lot of questions in the industry on how Humana is going to digest that growth in 2026 and now into 2027 with advance notice. They acquitted themselves really well, I thought, on this call. I mean, I don't know that with that level of growth that you could be doing any better. I think there's, other universes where stock is not doing nearly as well. And I thought that it was in large part due to how they told the story of growth. Like it's pretty convincing in some ways that they might have actually figured out how to crack the nut in a way that other payers have not, based off some of the numbers that they shared. So on the whole, I thought they did really well. It's trading down 2% right now at just under 180 bucks a share. Certainly, if you go back and look over time, like it's a consistent drop. It was up at what, 260 in late January. So advance rate notice already took a big hit out of the stock price, but on the whole, I thought it was a good, helpful earnings call that gave confidence, generally speaking, that this might actually work out. What about you?
Yeah, so the headline number was 25%. And that was driven by new sales and improved retention. Works out to an additional 1.3 million members. And yeah, that's a lot. And so when we'd been doing our back of the envelope math, we had been saying if CMS's prediction that the market is flat, the MA market is flat year over year comes true, there's based on everything we've heard from other payers, there's 1.3 million members going somewhere. And so we got we got an indicator of that this morning. It's like, well, they landed at Humana.
Yep.
And the other piece of the story that we'll get to later is the Centerwell, their provider group, and the Medicaid platform, which is part of the story that needs to be true and what they were telling. But yeah, I left the call, I would say, more optimistic for Humana than I felt before the call when I just saw the numbers at 6 a.m. this morning.
Yeah, for sure. Some of the data points they shared that I thought were particularly interesting on growth and why they were excited, happy about it. To your point, retention was up 5% year over year. Always good to retain members in this strategy that they're going down. 70% of new sales were competitive plans, which they noted on average have better economics. They then also noted, well, there's this question of competitive plans are exiting the market. Is that actually bad risk that they're shifting to you? Humana noted that only 12% of members from plan exits went to Humana, which is less than their market share, obviously, in the Medicare Advantage market. Conclusion being they didn't get disproportionate share of those plan exit members. Interestingly, I that data point is slightly different than how they frame the other data points. All the other data points are this is what our new sales, like 70% of our new sales was X. This was 12% of plan exits was X. I don't know how to square those two numbers necessarily in terms of what that overall impact is versus other members that these plans shed because 70% of them are from competitive plans. And so there's a disconnect to me in those two numbers of like, so you've got United, you've got others saying, hey, we happily shed this membership to get to profitability, to margin. And then you've got Humana saying, we took 70% of our new sales from those plans and we're actually good too. And it's like, I don't know how to square those two things.
Yeah, it's hard to, if you think, okay, there's maybe 1.9 or 2 million people who were part of plan exits.
Hmm.
Some percentage of them, you get a special enrollment period for Medigap if your plan exits. And so some of them probably went back to traditional Medicare. I 10% of that or 12% of that, that's like almost 250,000 people.
Yep.
Yeah, but overall, as we wait for the February enrollment file, which should be dropping any day now, it seemed like a pretty good story.
For sure.
So I think that there are three big questions that this brings up. And I think the first one is, what does this mean for humanity? Excuse me, Humana's strategy. What does it mean for humanity?
Humanity. That's a
But
good question to
also
start with.
for Humana's strategy vis-a-vis the other MA plans in the market, especially the big ones who you already heard report. And I'd be curious to hear your reaction to that.
I Humana at their investor day, if you go back and look at their slides, they have their EPS growth between 2025 to 2028, right? And they didn't put numbers on it, but they had 2025, 2026 goes down, 2027 is almost flat. 2028 is the year where Humana feels like it's going to start to hit its stride again. And we heard in one analyst question, like, okay, so 2025 EPS was what, 17 and change. 2026, they came out at about $9 a share. They noted that's conservative, setting up them well, I would think, to exceed that expectation. Nonetheless, an analyst was like, hey, what gives? This feels lower than we expected for 2026. What changed between December when you did investor presentation and today? And the answer was nothing really. It's just more conservatism for us in 2026. To me, it is the narrative that Humana is going with right now that feels like it is a little bit of a zigging while everybody else is zagging is we believe in the lifetime value of these members. We believe we have constructed our plan portfolio profitably. So they say that a couple of times on the earnings call, right? And this has been a talk track that they've had historically that they have been making product changes for years now where they think the entire plan portfolio is generally speaking profitable. They don't have loss leading plans. And that's an interesting part of their narrative, and it's what feels different than other MA plans. I heard this a little bit in one of the question and answer. An analyst asked about like how much of the membership moved from competitive plans into your PPO plans, and what's your membership mix between PPO and HMO? And Humana said we're not going to share that number. Uh, but we feel good about profitability of our plans on the whole, which kind of like it begs the question. The industry has moved away from PPO plans in the last few years because they're generally more unprofitable. They're harder to manage costs on, yada yada yada. They moved to HMO plans because it's a more profitable plan design. Humana is taking a slightly different approach, it seems, when with what they think they can manage profitably and what membership looks like, and they are trying to well, I don't know that they were trying to grab this much membership. Like clearly it came in above expectations, but nonetheless, they seem to think that they can manage this membership profitably, even the new membership, right? It was interesting to hear them up front talk about um, new membership is going to be accretive to the enterprise, not to individual MA margins specifically, but to the enterprise on the whole. So including some of the Centerwell assets, they get to margin positive, but the new membership actually looks the same as the existing membership from a margin profile because the new membership benefits from being 70% in stars plans. The existing membership is they were expecting, I think, around 25% in four-star plans, I should say, excuse me. Um, so that benefits the new membership margin, while MLR is higher on new membership and lower on existing membership. And so it nets out in the wash to be kind of slightly negative this year. But then they're like, hey, we're doubling our margin this year aside from the stars issue, and we're going to keep on that path. And it's like, that's a pretty reasonable story. Obviously, it runs counter to the story we've heard the last couple of years and the experience we've seen with other plans. And I think that invites the skepticism here. But as they tell the story, if I didn't know what happened in the industry the last few years, I'd be like, okay, I you know, sounds good. I don't know. What do you think about strategy and how it relates?
Yeah, I think that I mean, it makes sense as a strategy. And if you're looking for a non-consensus bet, this was sure it, right? I mean, this
For
was
sure.
really
Yes.
the thing to do. I so much of it's going to come down to execution. And I think
Mhm.
that, listening in this morning, it's easy to get bought in. And then you think back to what Humana has looked like over the last couple of years, and it's been a story of missed opportunities for execution,
Mhm.
especially around stars. And then, and that's the hardest piece of the puzzle, I think,
Yep.
to know how that's going to work vis-a-vis the other plans, because stars is a competitive game, and you're playing against other people who also have an incentive to work really hard on stars.
Yep. It's interesting that point on stars, like to your point on operational execution and combining it with stars. The whole name of the game is predictability, consistency for the market, right? Like we know what we're doing, we can predict this membership. We've got our hands around what's happening in 2026. It is interesting on that point to go back to their planning, their investor day conversation and that EPS curve I mentioned, and seeing them on that EPS curve. I'm looking at the slide right now, slide 115 from their investor presentation. 2026 assumes 25% of Medicare Advantage members in four-star plans. They're now at 45% because 70% of new sales came in four-star plans. That's a boon for profitability in 2026, certainly, but is also indicative of that's an entirely unexpected event, right? Or it's upside that they weren't sharing with the market in their 2026 plan. But to me, it's indicative of this question of how much is this actually is planned and they're executing against a plan and they know exactly what they're doing versus we're flying by the seat of our pants and we're going to get a new data point when we have Q1 earnings springtime and see what's happening, you know?
Yeah, and we'll never know how much of this growth was intentional versus getting offsides in some of their markets. And I mean, we just won't ever know. Uh, but I think that
Yep.
that is another thing that you could question around the operations and execution point. The other
Yep.
question that you and I were chatting about in the immediate aftermath of the call was around what, the long shadow of the advance rate notice for 2027. Jim brought it up a couple times on the call. Analysts had a lot of questions about it. That's for 2027. I'm curious how you're seeing the interaction of all of this growth running into 2027 with a potential headwind from an advanced rate notice of 9 basis points.
So there are two things that I think are interesting in this. One is related specifically to mana strategy. Two is the negotiation that may or may not be occurring between plans and CMS, kind of in this interim period between advance and final. Um, the least convincing answer I heard on Humana's earnings call today was the question about 2027 rate notice, and you're hearing all of your competitors say, "We're going to price for margin, and we're going to be okay with where membership nets out because we've got to get back to margin." And the analyst asked, what is your position on that? Because Humana kind of glossed over the details and said, we're gonna respond to it. We're gonna do what we need to do, but like when your strategy is we're going to retain all of this membership because we need to benefit from the lifetime value, and that lifetime value equation is what is so important and we need that in 2028, that is a bit incongruent with we're gonna optimize for profitability, right? Like you would do two different things in a world where rates are constrained dependent on what you are prioritizing. And Humana's answer to that was kind of we're gonna do both. Like we need to retain our membership. That is our priority, but also margin is our priority. And it's like I get why both of those things are priorities. When push comes to shove, you might have to pick one. And if the rest of the industry pulls back on benefits in 2027, what does Humana do? Does it prioritize retaining member and not pull back as much and risk getting more members in from those other plans? Is that a good thing? Because in 2028, they then get to benefit from that. I mean, there's a whole host of questions in terms of what all of this means for their 2027 benefit design that have to be fascinating if you're in Humana's teams right now. And this was kind of the question, like, when are you going to get data on 2026, and can you price that into 2027 so that you make sure that you're progressing towards your margin targets? Like that is got to be a really, really challenging exercise for Humana actuaries at the moment. To me, that is interesting part one. I'll do part two quickly, then I'd be curious your thoughts on them. Part two is if I'm CMS leadership and I am listening to CVS and Humana's earnings calls the past 2 days, Humana essentially said, hey, like our long-term story is fine, regardless of advance notice. We're unhappy with advance notice. We think that it doesn't reflect margin or trend in the industry, and we think it should. That is going to be a bad thing for seniors. They understand that the administration is trying to balance fiscal sustainability with a very popular program, but it's not reflective of the reality of trend. CVS had a very similar narrative of it's not reflective of trend. Interestingly, Humana today mentioned an analyst asked, and I think they asked United this too the other day, does this disproportionately impact you, the changes to risk adjustment? And Humana was like, well, no, it impacts everybody kind of the same. Which, if you listen to what CMS has been saying about trying to level the playing field, if you've got Humana saying everybody gets impacted by this, it's interesting to think about the implications of that for competition when this is effectively a rate cut for the industry and what that does to smaller players. Going back to CMS in this negotiation, if I'm hearing this and I'm hearing Humana and CVS say, hey, this is an issue, but our long-term margin targets are still intact. Like, we're going to be okay through this, Wall Street. Don't worry about that. I'm sitting there going, well, why is this such a big deal? Like, your margins are intact. I'm sorry that you lost $100 billion in market cap, public companies. Like, that's not great. But we've also got a budget crisis in this country, and we are trying to be responsible stewards of taxpayer dollars. Like I think it lends some credibility to that argument on the CMS side of the world. And I don't know what to like. I don't know what to do with that in terms of the broader negotiation because I think it's an issue when the plans are saying, hey, like we're still going to be good in 2027. Now they're obviously going to pull back on benefits to make that happen, which seems like it might be a political issue. Um, but I don't know. What's your take on all that negotiating dynamic?
I do think if I was working for Humana government relations, I would say, look, we're penciling in, I just looked it up, it's a 92.75 percent for benefits ratio and plus or minus 25 basis points. And our operating costs consolidated that includes CenterWell is 10%. And so I don't know, again, like depending on how you do the accounting, they're losing 0 to 3% on their insurance business right now. And that's not sustainable. Now, the bet that they're making, and if I was CMS, I would reply to them and say, well, why are you growing so much? Maybe you should just answer the phone when we secret shop you. Um, But yeah, I mean, part of the Humana story here is saying like, yeah, we're gonna manage this influx. It'll be better next year. We add back in the stars. Hope that rates come in where they will. And in the meantime, we're banking on interest income and Centerwell to keep us in the black. And that is a precarious spot to be in. I think it's like going to be a nuanced conversation if you're an MA plan working the government affairs, like working CMS on this. But it 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 is, I think, not popular, but fair to say that the insurance companies are getting hammered right now. The margins are, excuse me, very thin, and a 9 basis point growth rate from 26 to 27 is probably not going to be adequate for margin recovery for the modal plan net of stars.
For sure. It's fascinating to think about this in the context of we were talking in the community yesterday about Elizabeth Warren and Josh Hawley's new bill trying to break up big for-profit healthcare and separate out insurers versus care delivery versus PBMs. And it's like, okay, play out what happens with Humana. Humana, like as an organization, they would absolutely not be able to sustain losing margin on just the insurance business if you separated that out. So guess what would happen? you would have Humana have to pull back on benefits, raise prices, etc. And I, I don't think that's a great outcome here. To your point, like insurance businesses have been really hard to operate. They in part have built these complicated structures to both to benefit the end consumer from their perspective and also to figure out how to manage the healthcare dollar. And that's what Humana is trying to do here, right? They are trying to better serve members, create higher lifetime value for themselves, but also by creating a better experience for their members. Like they increased retention by 5% this year. That's pretty incredible, right?
Not nothing. Yeah, I'd be kind of curious to hear if you're, taking us thinking about the political economy of this. It's like the government with a 9 basis point improvement that's contemplated in the advance notice. The government's basically asking MA plans to make benefits much less rich
Mm-hmm.
because Humana during this call, Jim was talking right to the investors who are saying, I know you're worried, and the thing that we're focused on is margin. And we can't do anything about, I mean, he didn't say this, but he's like implied, we can't do anything about margin going into 2026. Our insurance margin is going to be bad, but the lifetime value, the story that we're telling there is that this is going to be accretive to the business and to the enterprise. And so the thing that CMS seems to be asking a company like Humana is make benefits less rich, manage care better,
Mm-hmm.
go to the hospitals and tell them, another thing that got brought up quite a bit on this call was negotiations with providers. And it's funny because Tenet is reporting right now as we speak, and they did 39% margin, EBITDA, adjusted EBITDA margins in their ambulatory surgery centers.
Good for them.
Good for them. And 15% in the hospital, in the inpatient. And that
Yep.
that to me is like that's where the puck is going, right? Like that's what CMS is seeming to be asking is that we're not going to be able to do this with Medicare rates, and so we're telling Medicaid and Medicare and private payers they need to go and solve the cost problem.
Yeah. I mean, it is definitely interesting to think about how it flows through in the political implications of that. Because yeah, I mean, if at the end of the day, this is the federal government saying, "Hey, we can't afford to spend as much as we are on healthcare as a country, and we're going through a hard period trying to figure out how we're doing that, and we made cuts to Medicaid that were hard. But as you've heard Oz say on multiple occasions, he actually thinks Trump is saving Medicaid because it's putting it on a better trajectory. It's still increasing in terms of cost, just not at the rate it was. You could also see them saying, hey, like we need to put Medicare on a better trajectory over the long term. This is what we're doing here. And then, yes, like you've then got to flow down from that. If you set it on this new trajectory and plans are like, hey, CMS, like we're out of business. We've heard CMS say they still want competition, they still want to support the market. So if you're a CMS leader, what do you have to do next? You've got to go down, like you've got to go downstream, right? If payers can't sustain themselves with a little bit of like, we're not talking about massive 39% margins here. We're talking about like eke it out 2%, 3% margins. Like that is what Humana is trying to get back to in its individual MA business, right? 3 to 4% margin range. Like we're not talking 40%. Okay, so go downhill from that. Where are the key cost drivers in that? You got to be looking at pharma and hospitals. Like to your point on Tenet's earnings, and I'll be curious to see how far this conversation makes it because the risk, as always, is the insurance companies pull back on senior benefits around election time, and people do not like that.
Yeah,
So I don't know.
I wouldn't like it either. That is, I
No.
think, the in many ways, people talk about Medicare Advantage being one of the most successful public-private partnerships. And what it does is transfer so much of the accountability from the government to a Humana and a United Healthcare and
Mhm.
and says like, we don't really want to ration care, but your investors will make you ration care
Mhm.
because they will stop giving you money if you don't. And I'm looking at this MBR of 92.75 and saying like it is just very hard. Even if you the most disciplined, I think the insurance plan with the lowest SG&A ratio is Molina, and that's in the high sixes. There's just like
Wow. I didn't realize it that low. Yeah. Makes sense. Yep.
yeah, and that's a different market,
Yeah,
obviously. I
yeah,
mean, it's
but
just not
yeah,
comparative, but like there's just like even the most beautifully run MA plan is gonna have trouble doing care management when medical benefits are coming in at 92.75. So
yeah. And you've got brokers to pay on top of that. Like you've got all of these other
there's a lot of
things
mouths
that
to feed.
happen anyways. Yeah.
Okay,
I
point number three that came out of this, and this was a quick one, and then I think we kind of move on to the bull and bear case. But CMS said, hey, we think the MA market, so when plans put together their estimates, they
Mhm.
were expecting the MA market to contract a little bit. And CMS, when they released the announcement last fall, said, we actually think it's going to be flat year over year. And that's been driving the math that you and I've been doing, where we take all of the announcements for growth or contraction. And that's how we got to 1.3 million left for Humana and the Blues. And so I'm curious, based on this announcement, do you think we are contracting flat or growing MA a little bit this year?
I'm more interested in hearing your answer to that question. But my quick gut read is I wonder if it is in fact growing ever so slightly, and that I mean, we talked about predicting Humana at 1.3 based off all the math that you were doing, and I think you should walk through that. To me, there is a question now of hearing Humana talk about how they're talking about their new membership coming in and how the market's reacting to that, and the fact that the other big players have shed their unprofitable membership and how the market has reacted positively to that. There is a gap between, like, it feels like there is a group of members missing, which is the unprofitable lives, right? And I don't know how big that group is, um, but it feels like we have not accounted yet for a number in that, which would indicate that the market is growing slightly, right? That's my conclusion from it. What's your take?
I'm gonna sharpen my pencil on this a little bit more and try to divine what Jim was Jim was talking about when he said we took 12% of the net exports from. So I'm gonna sort of put a pencil or put a pin in that and get back to you. But think that this points to likely modest growth in
Mhm.
MA. And the reason for that is that 1.3 million figure, we were premising that on Humana plus regional nonprofits. Regional nonprofits in MA is an interesting thing because they should almost never grow. Given a regional nonprofit's MA business and their finances, there's very few instances where you would say like, yes, you should be adding lots of membership. But they do anyway, often. And I think, I think you could probably pencil in 300 or 400,000 for regional nonprofits and local blues. There's been a ton of M&A in the local and regional nonprofit space. I'm sure someone is saying excited about growth and has a story for their board. And so, yeah, I think we're looking at continued MA growth year over year, albeit pretty modest.
Yep. So if that all is true, it's another really interesting data point in my mind for this CMS final notice negotiation that's happening with the industry, which is if you take that data point, you take the fact that regional plans are already hamstrung financially across Medicare and Medicaid, and we've already seen some plans shutting down, being acquired, et cetera, because they can't sustain their margin. And you accept Humana's point at face, which is the rate reductions are not disproportionately impacting larger players like they were seemingly intended to do to level the playing field around risk adjustment. What that would implicate, or the implication of that, if CMS is indeed trying to drive competition in the market and wants regional plans, smaller plans to coexist alongside with Humana, Aetna, United, 2027 is going to be a real issue. Like we're going to have a whole bunch of regional plans really struggling to digest some potential new membership, their existing membership. It's going to cause more financial pressure on them and cause more chaos in the market versus less stability, predictability, more competition. So I think that's going to be a really interesting dynamic.
Yeah, it'll be interesting to watch. And again, we'll have a better sense for all of this when the February MA enrollment file drops. So
Yep.
looking forward to
Yeah.
that. Should be any day now. Let's wrap up and just talk a little bit about the bull and bear case, I guess you would say, for Humana. And I want to do that both in 2026 and also in the long run. And so 2026, Kevin, give me your bull case for Humana, and then what about for the longer run?
So I think if I were articulating it, market right now has priced in all of the downside and all of the risk, and there is a lot of skepticism. This is not investment advice. Don't buy
Nothing is
stock,
ever
sell
investment
stock
advice on here.
based
Yeah.
off of this. But I mean, Humana is trading at what, $180 a share. Like it is trading at a low already. There's a lot of skepticism around whether or not Humana could digest this membership. And on the bull side, everything they are indicating is solid data points that they have done this quite well, actually, right? The new membership, how they're coming in, the retention of existing membership, they're not taking plan exits. 30% of the sales are bounce back members. They're acquiring them via higher lifetime value channels, better sales channels than they typically have. All of that is the right things to be saying. They seemingly are investing in getting to know these members earlier in the year, which should give them better data. They talk about being friendly to their VBC providers and having good relationships there. All of that is indicative in my mind of outperforming what they have acknowledged as a conservative target given the market dynamics this year. So it's not hard to see a scenario play out where they've actually got their hands around this. They have intentionally set a low target right now. The market has priced all of that in and is worried, and they're going to start to beat. And so 2026, that starts to tell the narrative. And then they are positioning themselves, and they did this on the earnings call multiple times, for 2028 is really where we hit our stride. But acquiring this new membership now and moving them along gets us there. And the stars number for this new membership, getting 70% in 4-star plans already versus the baseline of 25% for the business. So the blend is 45%. Like that actually puts them seemingly in a good spot. And they're working on operational expense and have opportunities there. They talked about how they're reallocating some of their corporate structure and whatnot so that the capital reserve requirements aren't actually that much higher. Like they've found enough dollars by streamlining to offset the requirements for new premium. Like I actually think that's a pretty compelling case in my mind, if you believe that they are going to execute on it, right?
Yeah.
How about you for Bull?
Yeah. So I put together a quick financial model here, and
Ooh.
the insurance margin, like if they beat their insurance margin right now, they're saying flat to slightly unprofitable. If they come in even 50 basis points favorable, that would be an additional 775 million in insurance income, and that I think really changes the story. And so if you look at their guidance, their $9 earning per share target is all at the low end of their guidance. And
Mhm.
so at the midpoint, they're looking at like 10 and 50, and at the high point of their guidance looking at $12 a share. And so I think that, yeah, I think like the in year 2026 you could see between the retention and the bounce backs better MLR than expected. Maybe there is some it's a little bit of the Empire Strikes Back where the coding wars start to tilt back um towards pairs. And yeah, I think it's a totally believable story. And then CenterWell overperforms a little bit, and like you are sitting very pretty if you're Humana going into 2027. And if you have a good start year, then it's like it goes from Humana being sort of the punchline to Humana being the story to watch.
For sure. I mean, this is the like, it was always this Humana leadership is either going to come out looking brilliant out of 2026 or they're going to lose their jobs. And to your point, like maybe they've actually thread the needle here and they have it right that they're going to acquire these members and they're going to get the lifetime value right and they've priced their plan design right and off you go.
Yeah.
Bear case?
Yeah, I think there's just very little margin for error on the strategy.
For sure.
So Centerwell needs to perform. They need to actually break even on their insurance business. The challenge for insurance companies over the last couple of years is they've missed their MBR guidance. It's
Mhm.
come in hotter than expected. Medical trend has been higher and stuff's been more expensive. And the reason for that isn't hard to find. Again, going back to Tenet, 40% margins in their ambulatory, it's like, yeah, if someone's making a killing there, then it's going to be harder for you to put that together. And so I think that the what strikes me as a plausible scenario is a miss in 2026 just because this is like a tough needle to thread, but they set themselves up really well for 2027. Just because this year they have to execute on center well, they have to hit break even. There could be some surprises in there. Medical trend is hard to anticipate. The being in the care delivery business is a tough business to be in, and sometimes you get hit with some surprises. And so you can imagine a scenario where 2026 is going really poorly. They make a change in management, and the change in management inherits a really nice scenario for the long run.
Yeah, um, it's an interesting perspective on it. Yeah, you could see these narratives play out over time, right? Like look at CVS, which had a very similar. It had its issues. It mispriced product. It sank. New management comes in, slightly adjusts strategy and tweaks it away from insurance to the overall enterprise pharmacy story, retail story, etc. And you're actually well positioned to then beat and exceed and have a nice runway coming out of um, the challenge. United's earlier in its journey, but similar kind of getting back to execution going forward from there. Yeah, it's not hard to take the bear side of like 2026 isn't going to go well. They don't have their arms yet around this membership. As that comes in, this new membership's going to be less profitable than they expect, and it's going to cause challenges throughout the business. Um, on top of that, like we didn't spend a ton of time talking about the pharmacy business, and it's a little bit of a head scratcher for me. Like where, I mean, they talk about the fact that new members are not profitable um, in the insurance business, but overall it's going to be accretive to the enterprise. And I look at that and I'm like, VBC primary care, wow, CenterWell seemingly has been doing it well. Like third year of V28 implementation seems challenged. I don't know what profit margin they're getting from new members in that book of business in 2026. I would be surprised if it's profitable given every J curve on every VBC business is not. Um, and then you've got the pharmacy business where you've got like a Molina saying they're exiting Part D in 2026, right? 2026, right? Because of the challenges in that market. And I'm just like, that clearly wasn't the focus of this call because of how much of the focus was on membership. But I don't know, Martin. Okay, 2026 doesn't go as planned. You have profitability issues, causes um, uh, challenges, and I think that's the thrust of the bear case. Even if you make it through 2026, advance notice and a final notice now presents a challenge in 2027, which is, hey, if they have to continue improving margin, which means they have to shed membership to as they pull back on benefits, does that undermine the long-term growth case of, hey, the LTV is what really matters here, and we're focused on retaining our membership? So to me, that's both like there's a near-term bear case that's centered around what's going to happen with this new membership in 2026. Then there's a longer-term bear case of the entire play is on retention of members and stability of benefits over time in a market that is potentially going to have to reset as CMS changes its approach. I do
Mm,
think, whereas like coming into this, I was probably 80-20 or 90-10 on bear case playing out and this going poorly. Um, I think this earnings call was a really positive step for them. Like I'm certainly headed more towards the bull case. I'm not at 50-50. But it is closer to, I mean, I'm what, 60-40, 70-30 versus 90-10. Um, so it was a step in the right direction for him today.
yeah. To me, it all, not at all, but a lot of this comes down to Stars' performance too. Stars is going to be so
Yes, for
indicative
sure.
of how they're managing stuff internally. And Stars is hard. It's hard because their quality measures. It's hard because it's a game that you play against all of the other plans in the market and you're graded on a curve. And so you can work as hard as possible on Stars and do your very best, and you can still get outcompeted by
Hmm.
someone else. So yeah, I mean, we're gonna start to get some interesting data points for Humana between the final notice on rates, and then we'll have a better sense for the puts and takes on their membership movement when we get the enrollment file, and then I think Stars is really going to be the next event to watch outside of their earnings calls.
Hmm. For sure. It's gonna be fun.
It'll be fun. All right, thanks, Kevin.
All right. See you, Martin.